Hey, what's up, everybody? It is Friday, May 19th, 2023. We're going to go over the markets here. A lot happening today, and especially going into next week, should be pretty interesting, kind of like what we were talking about yesterday. But starting out right here for the S&P 500, it's still in this five-wave move. We're just waiting for the retracement down here to the purple line at about 41, what is that, 4151.25. Then that five-wave move, the retracement for it will be done. It's obviously hit the target as far as the upside. It still could go higher, but for the minimum target for a hit, it has been hit. So I just keep drawing the five-wave up, however high it goes, and then that would draw the 50% retracement from the second point. That's how I signified that it's over for it. And I thought it was interesting. There is this guy I follow on YouTube. His trading is all about... he uses Elliott Wave for all of his trading. His name is, it's bullwaves.org. His name is Edna. And you see right here, he basically had the same count I did for mine. See the 0, 1, 2, 3, 4, and then 5. And so he's predicting that this is the topping pattern as well, and the market's gonna pull back some. I don't know what area he said for it, but what's that going into? SPP. Yeah, he's predicting an even larger pullback going all the way down here to about 3,700 for it. So that was interesting. If you want to, his channel is bullwaves.org, Edna, EDNA, bullwaves.org. He has no idea who I am, but I like following his analysis of the markets. He covers a lot of different markets, from oil, Forex, gold, silver, Bitcoin. So it's really interesting, especially looking for someone who specifically deals with Elliott Wave movements. Look him up, bullwaves.org. He's on YouTube. He has a website as well. But anyways, so yeah, that's my five-wave move up there, looking for the same thing. He's got a longer-term chart, looking for a bigger pullback from that. But just from this move right here, looking for it going down to 41 to 51. There are a couple of trade steps still looking for. The let's go right there. Go right there. There we go. So still looking for a 50% retracement trade down over here. Still waiting for that thing to hit. You can see right here from today, here we have the 830. There's the box trade set up right there. We had a break to the upside right here. So unfortunately, I was busy doing other things today, so I didn't really get to do any trading this morning when I was looking to do it. Had other things to take care of for work. But we had the break up here, and so we're looking for the target up here, 4229.25. That didn't happen. Came down here, hit the lower end of the box, so that moved the exit to top end of the box. So that would have been an awesome trade right there. So sorry to miss that one, because you're looking at about a 3.5 point win right there for that trade. So that one is done. And then, so when that happens, what you're looking for is, see, at the time, since it went up, we are looking for the retracement trade of the day. That's the time that was the low of the day right there when we had that go hit. So we take it up to here. I'm going to take this. No, I'll leave that 25%, 23.6 on. So we wait for it. So broke up high, wait for the 50% to get hit, which it did, all the way back to actually the 61.8, hit the 50. So that one is done as well. So the S&P 500 is done for the day. So we're just waiting for more downside. We're expecting more downside here in the market, just about for everything. Look at Forex Factory, because today the reason why is the debt ceiling talk limits between Republicans and Democrats. It got put on hold about raising the debt ceiling, so that's why the market today is, I mean, it's not a huge sell by any means, but it's all in the red. That's the reason why it's in the red. And then the Fed inflation is far above the Fed's objective, so they're basically saying that there's going to need to be that they need to get failure to get inflation down for prolonged pain. So basically they're hinting that there will be more, or Powell was saying that there will be more interest rate hikes coming in the future. It's not going to be slowing down, which, I mean, don't know if that's really going to stop the market, because they, ever since they've been, if you go to the longer term, ever since they've really been raising it, going back especially to October, then market's been going up. It hasn't been going down. So even if they keep raising them, why would the market keep going up? It has been going up. So not sure what's going to happen to it, but with the whole debt ceiling thing, that since they paused it, when just the other day they were talking about how there was a lot of progress being made to it. I mean, at the end of the day, what's pretty much going to happen, what happens every single time, is whether Republicans or Democrats, they'll threaten and say it's the other side's fault, blah, 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 and at the end of the day, at the last minute, they'll find an extension and they'll raise the debt ceiling. So that's what is going to end up happening for it. But until then, we're looking for the pullback at least down to this level right here, 41.51. So not a whole lot. It's just another 40 points from where it's currently at. And we'll see if here there's another about hour and 45 left in the active trading on a Friday market. We'll see if the sell-off will continue as all the bulls get out of the way from it. Going over to the Russell 2000, this was a trade set up right here going in from the other day that we're looking to get fulfilled. Going all the way back here, this is a 50% retracement trade from the box trade that never hit when it hit the 50, never hit 38, when it hit 61.8, never hit the 50, and just took off to the races. And this is what happens. This is what I was talking about, where if you always take that 50% trade, yes, the majority of the time it will work out no problem at all, but once in a while this does happen where the price shoots up the other way. And so if you're in that 50% and you want to make sure you get a profit out of it, you're in the 50% trade down 38, well, the price goes up to the 61.8, the exit moves up to the 50%. So then your break even for the 50, and you'd like to get in the 61.8 because then that would get you a little bit profit going down to the 50%. So if you do that, then right there you are now in 2 contracts for it, and now you'd have to ride 2 contracts. Or you don't have to, but this is the way I trade. I really don't use stop losses. The only time I get out of a trade for a loss is when I know that I've entered in incorrectly for trade, which happens. My analysis is messed up, I missed something in it, and I just have to get out for a loss because it was my mistake. But other than that, I don't use stop losses for it. And so price took off after it, and this happens sometimes, no big deal, took off. So the next contract I had, you can see right here, I got in right at about the 4.236 level for it, and it was also from the previous days for the extension move. It was right up in there as well, right in the sweet target zone. So thought about getting right here at 1.146, which could have. But I said, you know what, we'll just try to ride it out to the 4.236 since it's right in the zone. It did go and get hit, and ever since then, that has been the definite high of it. Didn't even close above it, and has been selling off since. Now, price can waffle around for sure. We could get a move back up here, maybe higher, before we get the sell-off again. Seen that plenty of times. It gets down lower, but we get pushed, likes to go higher, and then you finally have that sell-off for that. So wouldn't be surprised to see that, but hopefully price just continues to roll on over. The ultimate exit is going to be down here at the 50%, which is 1747.1. That's the exit we're looking for. But what I'm looking to do for this trade right here is, hopefully this happens Monday morning when I'm trading, I'll be able to do it. I want to get out of this trade right here rather than holding them all the way down there. I want to get out because what I want to do is right when I get hit and get out, I want to reverse it and go long right here because this is the extension trade that I'm looking to take for it. So get out right there, then go long right when I get filled right there. And price will either do one of two things. It will bounce off of the 1.414 level because, as you can see, when it went up through it, there wasn't any pullback at all for it. Hit the 1.146, did not pull back at all. And then when it hit the 1.414, it didn't come down and hit the 1.146. So it just blew up through there. So when price comes back to it, I'm looking to get out of this trade I'm currently in right there, and then enter it right here. And so when I enter it, the X I'm going to be looking for is the 23.6 level right there. And if it keeps saying, go down lower, I'll just draw it down lower towards it. But if it hits the 1.414 level, then the exit I'd be looking for is the if it hits the 1.146 level right here, then the exit would move up to the 1.414. And then I would look to, once I get out of those longs, get into the short again. So in the perfect world, it hits right off. It fills me right there, right above the 1.414. Goes down maybe just a tad bit more. Easily get into a long trade right there after I get my short. Stops right there. Goes all the way back up to the 23.6 level. So I get out of that trade over there, get 10-point profit. Then as soon as I got long, reverse that again and get in with another one, if not two contracts. and probably 2. Yeah, I would think 2. I mean, I'd love to get. I wish it'd go higher and get in there. That'd be better than what it is right there. But anyways, get in short, and then probably one contract, and then take it all the way back down there, just in case, if price does continue from in there, say it goes up like all the way up here, something like that, maybe to the 50% level, get in with the second contract along right there. But that's the game plan going in for the Russell 2000 for next week for that one. The Dow Jones today, here's the opening bar, closed above it, so we were just looking for the target for it, and as you can see, it hit the target, but before it did that, it closed above it, and then it went up and hit the target. So nice trade right there. And then for the 50% the other way, you see, waffled around, right, hit it, no big deal. So Dow Jones, nothing else is really going on right there, and you can see using the previous day's highs, lows, the extension previous day high, low, the extension to the next day, hit off right off the 1.146 level, and took that out. So that's all that is doing for the Dow Jones. It's probably been the most quiet one out of the rest of them. Crude oil, here we had the opening candle right here, closes below it. So for the box trade, it went straight down and hit the 1.44. But then for the retracement trade, still hasn't come up and hit that yet. So we're looking for a retracement back up here to 50%, assuming whenever the low holds in, and that'll be the 50% trade that we are looking for that. For the overall, this is crude oil, yeah. So, and then you can see, if you want to use the previous day's high-low for the extension trades, see the went up to the high side and hit right off of it between the 1.146, right off the 1.44. Then the low side, now it's come back down to the 1.146 level, and it seems like that's been the support level so far for the day. So for oil, the bears may be over with it, leaving for the weekends, and that's why it's starting to drift up a little bit more higher for that one. But just wanted to show how those daily extension levels, how they work most of the time. Like I said, it works most of the time. Like here we have this one, there's the level right there, 1.146, hit right off of it, reverse back off, hit there, 1.146, reversed off of it, but then it found support, and then it started just being a measured move up from there when it hit that level right up there. So that is that. So let me put back on the retracement trade, because that's the trade we're looking for going into Monday. Nasdaq, this is the extension trade setup that we are looking for to get into right here. You can see I still left on the ascending triangle trade setup right here as it had broken out above it. So we'll see if that's just kind of like, it obviously is a pump higher, but we'll see if that is just get as many longs as it can before we get a breakdown for it, because ultimately we're looking for price to come all the way down here to 13,051, and what that is off the 30-minute chart, a semaphore retracement trade that we are looking for. This price has gotten pretty close to the 6.85 Fibonacci extension level as well, which can signify the turning point of what we are looking for this one. So the trade we're looking for, which probably won't get filled today, it didn't look like it. In fact, I'm going to go ahead and take this off just because I don't want to hold all those contracts going into the weekend. Take that off, and then take that one off right there, because we're looking for when price comes back and hits the 1.44 right here, because you can see from this day's the previous day Fibonacci extension levels, how it just blew off through it. There wasn't anything stopping it at all. There's no retracements at all. Blew off through it. Almost came back and hit it. Didn't quite hit it yet down there. If it did hit it, then I wouldn't be taking this trade for it. Came down close, but didn't. So when price comes back down, I'll have my first long set up on the 1.44 level. Exit would be the 23.6 level right there. So potentially about a 52-point Nasdaq. And then if price continues to go down, hits the 1.146, then the exit moves. I'll get in down there as well. Then the exit moves to the 1.44. And if for whatever reason, price keeps on going down even lower without coming back, I'm not sure. I'll have a third entry somewhere down in here. Not sure exactly where, but definitely will, because price will eventually go back and hit the 1.414. So that is Nasdaq's ultimately, again, just like pretty much some of the other markets, looking for a deeper retracement down to right there. Last but not least, we'll go to Bitcoin. To be honest, I didn't even look at it this morning. We had, going into it, a retracement trade, and we say it hit the 50 right off of it when the market opened, came back and hit the 38 from yesterday, and that completed that one. And then going into today, let's see, where's the 830 candle? There's the 830 candle. Yeah, so you have retracement lower, and then it all got, with these two candles, that would have taken care of everything, whether you're going long or short, to finish that one out. And then if we look at having a retracement going the opposite way, nothing there, and then probably there, depending on what this candle did. Even if it's up right here, that would have fit everything out. So either way, if it's still up, I'm not going to the 1 minute chart to look at it. It's not that big of a deal. It got figured out and hit everything as well. So that would be, excuse me, Bitcoin as well. Going into next week for Bitcoin, MFI is middle of nowhere. In the middle of nowhere here, we're still looking at that 5-way move for Bitcoin, looking up to going to 70,815. The only way that doesn't happen is if price first breaks below into the second wave right here, which signifies the yellow line. You see it got close to with the fourth point, the potential fourth point, but it did not. So if price does go below 14,170, then the 5-way move is null and void, but it hasn't yet. And which other one was it? Litecoin I was looking at. Yeah, Litecoin is the other one, which is kind of going somewhat close to what Bitcoin is doing. Some potential 5-way move up here as well. So anyways, those are the setups for today and going into next week. That's what I'm looking for. So take care. Thanks. Bye.